Alright, good morning, good day, good Sunday. This is African Crypto Warlord. Today we're going to be looking at Bitcoin USDT in a longer term time frame or mindset, let's just say. So, what can we see here? On 26th of March 2022, we had a 7-day mean reversion flash. That price is pretty much quadruple for, so 44,444. Alright, this is a random distribution down and in. And what can we see? It hits the outliers, hits all the Laplace distribution bands, gets caught up in between the two. And generally, when you start closing above or below the bands, you can look for continuation. So just to bring us into the last, let's say, 4 weeks of price action, what can we see? We obviously got above this one and got stopped by that one. And as you start closing below it, you can expect to go test the downside target. So in the last BTC video, we have put up targets. So we knew that failure at 23,450, you could say, or there, 23,420, was going to initiate some more downside because that would be hard grind under negative drift. So negative drift has kicked it down. Now, if negative drift turns into volatility expansion to the downside, then you can expect, let's say, 1932. Otherwise, you get what we have here is just sideways action. Okay, so we're just going to go look at the direction of volatility and we're going to just break it down. I have some notes here, so I'll summarize from the 21-day to the 12-hour is what, if you're a longer term trader, those are the levels you should be looking for tests or where things get exciting. So what can we see? We can see that at 22,186, so 22,186 up here, 22,186 is where you can look for continuation to the upside, and that will come from the 12-hour. So you gotta look for things that will get you to 22,186, and that can kick around the 12-hour. So now we're gonna start from the 21-day and break it down. So any price action below 21,787, you can look for continuation to the downside. Initially, it can come and test. If you go to the right, the first pit stop from here could be 19,69.7. Alright, so 19,690, and this is under expansion of volatility. Now, that is a longer term play. Okay, so 21 days worth of this, so about 40 odd days, 45 days plus, just call it 60, you can call for continuation to the downside until stated otherwise. Alright, there's 10 hours and there's 10 days and 58 hours until this closes. I'm messing this all up. Doesn't really matter there. Alright, now to the 14-day. So you have contraction in volatility whilst positively correlated, which means that that's negative drift. What else can we use for that? We can say that ROs mean reverting to the downside. So if you close below this red line over here, alright, you close below 22,222, you can look for continuation to the downside. We will get the targets as we start to drop in on the lower term time frames. So off of that, we can see that if you fail here, you can get to 17,136, or this cross here, 17,584. Right, that's for continuation down. Now a hidden bull div, which will be formed by this mean reverting to the upside, that also saying returns have stopped decaying to the downside. It's a very sideways moment here on the 14-day, but if it holds above quadruple to 22,222, you can expect this to be a hidden bull div, and that target of, let's say, 29,494 comes into play. Okay, because that is the mean of the 14-day. Now let's get a little bit more critical. So this is the 5-day. What can we see? We're closing below the general trend. So the more you close below the general trend, you're going to look out for the break in the previous trend. So 19,070, if you carry on closing below 22,352, okay, with mean reversion to the downside. So we've got to look for things that would be the outlier to confirm this RO to turn around. Alright, and there's two places for that. If things get sticky, you're looking at 21,104, or this region here, which we've already quite verified. So just call it $19,069. Okay, this is the mean. So any closes above here can seem bullish, but generally if it comes in, touches the mean reversion plane, then goes for the outlier within the current data of the mean set, then you'll know, okay, cool, it has the opportunity to break through. Otherwise, if it comes from here, it will hit the orange band, get faded back down to pretty much the same region where the green line will be. So that's what you'll look out for, so you don't get trapped. So you gotta look for continuation. So things like the 3-day, pretty cool. And what makes this super sketchy is that volatility has been crushed pretty much, all right, and crushed in positive in positive correlation brings negative drift. So that's under no expansion in volatility, it dropped. We'll get the percentage. So we'll just say big crushed from this part. So pretty much 6.6% to the downside under no volatility. Alright, so now with the PCs coming down, the thing you got to look out for is expansion to the upside. Why? Because that will easily be able to break this range. Okay, so what I can expect on the 3-day print is the next print will happen because these two lines will be crossed if it closes about here. So it will naturally cross and there will be liquidity at $22,112. Alright, and if you start closing above that signature in any of the structures, look for continuation to the upside. But if you start closing below that price, look for continuation down into this mean, 20,265. So the 3-day and the 5-day are very good ranges that I like to get awesome outliers on and just be patient with. Sorry, let's drop it to 24 hour. I'll put it back on the 3-day. Let's drop it to 24 hour. So what can we see here? Let's not go blind, but there is a buy signal coming in and returns are looking to expand. But which way? RO says there's an opportunity for mean reversion, okay, but what happens is if it fails below this orange line, you can expect it to come back to the zone of liquidity at 21,752. But as soon as it starts closing above 21,908, you can look for a run to 22,491. Furthermore, when this crosses, there will be liquidity waiting up here at $23,050. Now, to deny this mean reversion, its legs to the upside, closes with the orange line, and if it does get out of there, I'm sure it's going to be a quick one up here. So the longer this dildo is to the upside, the easier it is to hurt it when it gets to the other side of the mean at 22,507. Right. 24-hour has that as outlier. There are some UMPs here. This is the longer term structure on institutional levels with regards to BTC. Be that. Alright, so there's a mean down here at 20 grand 50, another one at 18 grand $939. Point of liquidity for a very long time. That is also a zone of liquidity. So come in here, wick to this level, I suppose 20 grand 150, back up to 21,000, you could say. Close above 21,000. If you do get down here, could be quite a good turnaround to try fight this ultimate power mean. But that's for a later stage, but for now it's going to be trapped in here until stated otherwise. To see the to see the levels in which it can break out of is here. So it's trying to come back into its trend. This is what the thumbnail is. It's trying to come back into its trend, and that mean is $22,517. So we sort of heard that. And because this is now below the previous market structure, there could be a bad div play out to 23,560. Any closes below this orange line, continuation down, we put it onto macro structure into here, $21,000. Okay, so that's just on the 12-hour, the 24 hours. So that's the positive. Let's do the volatility analysis. Sorry, here, and this was of note. So the mean reverse, so there's been expansion of volatility, which has been crushed by that negative drift in the higher term time frame. There's been expansion of volatility and not much has really happened. Alright, so what you got to look out for is sure, this could expand for 3 or 4 candles, but the contraction phase will be just as big. And if the contraction phase is still positive, correlation, then that's going to keep you underneath the mean. So to have another 2 or 3 candles expansion, you'd need about 3 to 4 candles to keep you under volatility expansion up here, and that becomes quite rare. 1, 2, 3, 4. That'd be about 8 to 9 candles to get you into this. So that's 9 days worth of action. So we'll just keep it here. So volatility analysis is looking overextended. So looking for negative returns to increase. Alright, so there's a bear div on the 12-hour. Bear div plays through generally if it fades itself here at 22,181. We have that target previously. And this little bit sideways volatility, which is alright. And what we'll do is we'll put on we'll do the VRE next. Okay, so it's bear div. 12-hour, not looking like I want to go playing there. 6-hour can look for continuation through with regards to the negative drift. The 12-hour note was 22,186, right? So that's that region. If the 12-hour can get above and hold above the mean, you'll look for maybe continuation into these previous bear div regions that we've said. Alright, okay, below previous market structure. So it could be a little trapperoo over here. Furthermore, just failure below 22,186 does look for continuation to this side of the mean, 22,882. Okay. 6-hour closes below. So there's expansion to the upside, but it is under a random candle, and there's a whole bunch of levels. So it is having outlier events. Problem is if it closes below this orange line, this will be a good one to observe, even better. We'll turn this off. If it closes below 21,875, it'll be easy for the 6-hour to mean revert to the downside. Okay, you're just going to look for that thing to have a little fake out, and then it'll extend Mundo to the downside. Here we've got the 3-hour now, so this thing's dumping under volatility contracting was positively correlated. So it says volatility is going down the hill, and check, price action is also, price action is going down the hill, and thus it's matching volatility's direction, kind of thing. Depends on which side of the chicken you start skinning first. Okay, so any regions that will be fought over, if it can stay above 21,769, is generally up here at these crosses. So we'll just say a region of 22,452 to 22,450 to 22,550. But bull div mean reversion play can still happen here. The little W, maybe I suppose that everyone would make a thing out of. Anyway, and that can generally happen at 21,789. Hold above there. If this takes a long time to play out on a 3-hour and just goes sideways here, the next pit stop will be higher than. If this orange line gets above, let's say, those wicks, it will be a good point for a book flip. So people that are short, they structure here that they get long, and they just, if you want to buy it up, you can buy it up over there, let's say, and manage your risk accordingly. You're looking for the 3-hour trend to start to increase the upside. So anything I'd say, be super bullish if it closes the 3-hour trend above 21,866. But generally, if it's closing above 21,791, I'd look for that as maybe like a front run on the on the trend. Is over here. It's a little front run. So if it closes above here and fights above this mean on a 3-hour, I'll look at this as a general front run if it doesn't touch it. So maybe look for continuation up and out. What negates it is if this 3-hour negative drift carries on kicking in. Alright, and that would generally be if it closes below this target, 21,867. We'll look for 21,719.80. But this negative drift, if it's bullish, it won't touch the green line and when the wicks come in. So we'll go look at the 90-minute. Now we have the 90-minute up, and we're just going to go to this side of things. So we'll have some expansion to the downside. Currently it's random, okay, because there's a yellow candle. Alright, there's a daily mean over here. So you hold above the daily mean, you can look for continuation to the upside. Okay, hold above the daily mean, you look for continuation to the upside. There's structure that wasn't really touched at 21,750, but that will be for later. Anyway, we drop it in. This is the monthly. So the monthly is at 21,000 191. Volatility ranges, percentage differences, blah 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 blah. That is where your macro, higher term macro structure is. Okay, that's on the 90-minute. There is a weekly mean back at 23,221. Okay, we did come up, test it, fail it, come down, and we're trying to target, I would say, the monthly mean. Given that we've just started the month, I feel that it would be healthy to go to 21,191 if you're bullish long term, because if it holds above there on the higher term time frames, let's say on the 7-day, 5-day, 21-day. Remember, we have a 21-day negative drift looking for expansion. So if that does, well, it will be true. It just has to pretty much start closing below the daily for it to kick in. But if that does have the legs to follow it through to the downside, then this will be a place to defend it. Furthermore, if it fails there, you're looking at, we pull this target up, 20,247. 45 minutes. Oh, let's not all go crazy. We'll just leave the institutional levels on. Okay, so what's our institutional level saying? This is a mean, and that's what pretty much caught it. Now, if I was to, I'd say because we're working into the mean and you're holding above it, you're going to look for this, the volatility to contract. And if it contracts, whilst this is negatively correlated, they'll add the float to keep it above the JMA on the next print. But RO to the downside, if this prints red, you're going to look for a trend for continuation. A lot of things are saying down. Okay, 45 minute, close it below 21,806. Just look for any one of those levels. 21,612, furthermore downside, 21,694, and this will be a spot that will be quite well contested, 21,772. Okay, so the daily VRE level, let's see this perspective, is here. So there could be a lot of fluke out. If these are small candles and the red line gets to the red line and touches through, there can be a lot of fluke out. There is mean reversion play here. Okay, to the downside on the 45 minute, 15 minute. Let's see if it can hold above said VRE. So there's our data. This should have been loaded already. Okay, contractions initially coming in. So the contraction in volatility will happen if it keeps above the JMA. Alright, that just printed green here. So I don't know if you can see it. But there's a little thing that went green. If it stayed green, come on there. If it stayed green, then the contraction, if it stays red, there you go. You'll look for continuation to the bottom side of the daily mean at 2173. Okay, this is the daily mean. This will always be a target. If it starts closing below this red line, look for the 21-day. This 21-day to extendo mundo, and the targets that we'll pull up for the 21-day institutional side and our side can be 20,317, another touch at a book flip touch, 20,874, which is what we're below, so that's not good. Expansion is coming through, and the 7-day. Okay, so if you fail those targets, outliers 1874, we already put these structures up previously, 19,574. These are levels that we'll look out for, and put this up, and that, and we can see that these are levels closing below, coming back in. This is just general data of the mean. So I say the closes below the 7-day JMA, you look for 20,481. And if this does carry on closing below the JMA, you look for the 21-day expansion, which is maybe not so healthy. I hope you have a great day further. African Crypto Warlord, out.